This trade made me $3,243. This one made me 12,808, and this one made me 10,780 in just a couple of minutes. Today I'm going to be revealing the 6 steps to finding life-changing trades. Trades that are explosive, trades that are massive, trades that will make you a shit ton of money. I have all the steps over here lined up. We're going to go through each one of them. Let's begin. So the first step is very important. Let's go through it. The first step is the fundamentals. If you don't have the fundamentals, you don't have anything. So the first fundamental is you need to make sure you have a broker. We're trading stocks here. We're not trading crypto. We're not trading Forex. You need to have a broker. Set one up. It's super simple. Find the best one for you. Maybe some are available in your country. Maybe some of them aren't. Do whatever one is available for you. Some good ones that I know is TD Ameritrade, Robinhood, Interactive Brokers. That's the one I use. Do whatever fits you. Like, do whatever is available for you. Third thing is you need to open a stock screener. There's 20 million stock screeners out there. Do whatever you like. There's Finviz, there's TradingView, there's Zendu, there's so many different ones. This is Finviz over here. You can see you have all these different things that you can change, whatever. The one I personally use is TradingView. You can see right over here it says stock screener. Click that. This is my setup. This is the exact one I use. There's so many screeners out there. Don't overcomplicate it. Just use the one that's the most basic. Just use any. It doesn't really matter, right? Now let's move on to step 2. That's already step 1 covered. That's how simple it is. Let's move on to step 2. Step 2 is a screener and gap. Let's focus on that. So you need to find gappers. Gappers are literally just stocks that are going up pre or post market. So let's look at TGL for example. This is a stock that was a gapper. If I go to the 1 day interval, you can see that right over here, there's a big gap in the chart. It closes on the 2nd of January at 18 cents and it opens the next day at 73 cents, right? This is a gapper because there's a big gap in the market. Now this happens for a couple of reasons. It's very basic stuff. The first reason that it happens is because the stock posts some news. So TGL, Treasure Global Inc., whatever random company this is, they might post some news saying, oh, hey guys, we just discovered this, or we signed a new deal, or this happened, that happened. Whatever happens, they post some news. When they post the news, the stock instantly goes up. And it goes up in pre or post market. That's what a gapper is. Those are the types of stocks that we want to look for. And that's where we use a screener. So go to the screener, find the stocks that are gapping up, and you're good to go. Some other things, some 3 or 4 other things that we need to be wary of. The first thing is low market cap. You need to have low market cap. TGL, if I look at the market cap of TGL, it says 6.62 million. That's tiny. We don't want to be trading stocks like Apple or Nvidia, which are trillions and billions of dollars. We want to be trading stocks that are tiny. A couple of million, 2, 3 million, perfect. If a stock's like 100 million, 200 million, it's probably not going to go up. So we need stocks that are small market cap. After that is small float. That's the same thing over here. So if I click over this, you can see shares float to 6 million. That's tiny, super tiny. If a stock has 4 billion shares outstanding, it's not going to make a move. We need small market caps, small shares float. And that's exactly what you can see over here. The next thing we need over here is high volume. You can see on the day that it gapped up, look at the volume on that specific day compared to the previous day. This is what we need to see. If we see a stock gapping up, but it has literally 3 people trading it, you do not want to trade it. You want a stock with thousands of millions of shares being traded. That's very important. Now another thing is we need to see the gap percentage. We don't want to see a stock that's gapping up like 6%. We don't want to trade any of these. These do not go up. The ones we want to trade are the ones that are above 20%. Above 20%, it kind of signifies that this has some momentum, this has volatility. Those are the stocks that we want to trade. Look at this. Below 20%, literally you can see it's just negative, 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 negative. After 20%, you can see that some of these are positive. You see what I mean? So 20% is really what I found the best number. If it's about 20%, you should consider it. Now, if a stock is gapping up like 6,000%, 10,000%, something crazy, it's probably not a good idea to trade it because it's already up way too much. So don't be trading that, right? And lower than 20%, like I said, you should immediately just forget about it. It's just useless. So let's move on to the third step over here and let's see what it is. The third step is the watch list. So once you have all of these stocks in your screener, you want to go through each one of them individually. You want to study their charts. You want to see and analyze the charts and you want to figure out the best ones to trade. Now you might look through all of them and you'll be like, okay, this one's market cap is too big, this one's float is too big, I don't like these ones. The only 1 or 2 that I like is this and maybe this, right? So you make a little watch list. You're like, okay, these are the ones that I'm going to be trading. Now how do we specify the watch list? What do we look out for? First thing is consistent volume. So if I go to the pre-market chart by going to the smaller time frame, you can see that this is the volume over here and this is the pre-market. You can see that this one over here has very consistent volume. It's not like the volume goes up and then just dies and there's no volume. It's kind of consistent. That's the first thing we need to see. And it says the next thing is a drawdown. We do not want a stock that is just going up and up and up and up and it's opening here and it's open. We do not want that. You can see the stock is going up and has a little bit of a drawdown. That's what we want to see. We want to see a stock with a drawdown. We don't want to see a stock that just continue going up. We don't want to see a stock like this. If the next candle the market opens, we do not want to be trading this because it is probably going to go down. We need to see a drawdown, something like this, where the stock's kind of going down. That's what we need to see. Next thing we need to see is support levels, right? Support levels are pretty much just levels where the stock finds some support. So this is a perfect support level over here. Another level will be maybe somewhere over here, maybe a little bit lower. But these are support levels. We want to be entering on these when we can confirm the stock finds support. That's super important. Let's move on to the fourth step right over here, which is entry. So we always want to enter on a drawdown. We never want to enter as soon as market opens, because look what happens if we enter as soon as market opens. It just goes down. So if you enter right over here, you'll be down a lot right now. You do not want to be trading this because you will be down a lot. You're just going to end up losing money. If you just immediately enter when market opens, you're going to lose a lot of money. What you need to do is you need to enter on a support level, right? So make sure that the stock respects the support zone, right? If you see a support zone and the stock just blasts right through it and keeps going down, that's not a support zone. If you see a support zone and the stock kind of bounces on it and kind of goes up, kind of goes down, maybe it's a support zone. Maybe the stock respects the support zone. You want to keep looking at it and you want to be ready for an entry. Make sure volume also comes in on that support zone. Very important as well. Everything needs to be accompanied by volume. It's very important. And the last thing is you need high opening volume. So you can see over here, the opening volume on this was extremely high. Some stocks you see, opening volume is tiny. It's almost nothing. You do not want to be trading these. This stock had a lot of opening volume, massive compared to pre-market. You should be interested in this. That's the whole point. Let's move on to the fifth step, and it's selling. Now there's a couple of reasons that I would sell. There's really not that many reasons, right? The first reason is VWAP resistance. So let's assume that I bought the stock right over here at a support zone that I identified. Perfect. If I see the stock is going up and up, but this purple line over here is VWAP. If I can see the stock is going up, but it's struggling to go above the purple line, it's going down, it's going down, it's going down, I'm going to sell. Because what that signifies is it's finding difficulty going above VWAP. There's some resistance, I'm going to sell. The second place I would sell is at pre-market high. So again, let's say I entered over here, I'm going to sell at the pre-market high, which is right over here. I made about 35%. It's that simple. That's the second place. And the third is half dollar and whole dollar resistance. So you can see this stock is currently, let's say when I entered it was like 96 cents. I would be looking to exit at like $1 or like $1.50, you know, because it's a half dollar or a whole dollar. This is kind of rare. I don't do this too often. Most of the time it's pre-market high or just VWAP, but half dollar, whole dollar, it does come clutch a lot of the times. And you need to make sure that you double whatever you lose. So if your loss is like a 5% loss, the minimum you should be making on every single trade is 10%, 11%, 12%, 15%. You should never be aiming to make 10% and aiming to lose 10% because your account is just never going to grow. And the last step, step number 6, is to repeat and analyze every single day. Repeat this strategy every single day. Look for gappers, watch list, make like a support zone that you think, wait for market to open. When market opens, wait for the stock to respect that support zone, enter, exit on VWAP resistance, exit on pre-market high, whatever, and just repeat it every single day. And another thing which is super underrated, nobody talks about this, is you need to analyze every single trade that you make. This is super important. Nobody does this. Every single trade you make, if it's a win, it's a loss, it's a break-even trade, look at it, figure out why you entered, figure out why you sold, figure out what you could have done better. Literally every single time I make a trade, I make a video, explain to my community. I literally tell them, this is what I did, this is why I entered, this is why I exited, this is a theory, this is what I could do better next time. Analyze every single trade because that's how you get better. You don't get better by just repeating things. You get better by analyzing every single time you do something. That's how you get better. Now I'm going to show you proof that this works for me and it works for a bunch of other people. So this is my community, the Draco Room. You can see inside that people are making so much goddamn money. This is the Wins channel. You can see every single day somebody's making money. It's crazy. It's crazy to think that this is happening. Look, hundreds of dollars. This guy made $1,000, $139. What is this? 105, 70, 62, 41, 1,800. Every single day somebody's making money. 1,000, 1,050, 2,800. And this right over here is the watch list channel. On this channel right over here, I tell everybody exactly the stocks that I'm going to be watch listing that specific day. I do the work for you. I look through the scanner for you. I watch list them for you. I do all the work for you. You simply just have to watch the stocks that I put on the watch list. It's that simple. I literally do all the work for you. Inside the community, you also get access to all of my trade reviews. So earlier when I mentioned after every single trade, I make a trade review, this is it. This is all the detailed videos where I go through every single trade that I made, how much money I made, the community wins. Like literally you can see every single day, I just make a video explaining my trade, my thought process, how much money I made, literally every single day. This is super valuable stuff. So if you guys want to join the community, email me right now to join. This is the email right over here. I am going to be closing the group soon to just focus on the members inside, so email me while you can and I'll try to get you a spot inside. If you want to watch a video where I explain the one indicator that turned me profitable overnight, click the video that just popped up. And again, thank you guys for watching, subscribe, like, all that good stuff. See you guys in the next video. Peace.